welcome to all the investors. Of course, the market rallied into Memorial Day weekend, and thank goodness, because we had 7 down weeks in a row, but we broke that streak this week, Derek.
Oh, we certainly did with a vengeance. The S&P, the NASDAQ, and small caps all closing up about 6% for the week. The 10-year yield actually declined a little bit to 2.73, and the VIX finally started to give up some ground now in the mid-20s.
Right, and the VIX, of course, the fear indicator, and started to come back down. And again, on Friday, we had a number, an inflation number that perhaps suggested that inflation is starting to peak, and it's called the PCE, the Personal Consumption Expenditure, and that came out on Friday.
Right, that is the Fed's favorite inflation gauge. They've said that any number of times, and on a year-over-year basis, it fell from 5.2% to 4.9%. So that does potentially reinforce something we've been saying for a while here, that we thought inflation was peaking, but we certainly know there is still a long way to go to the Fed's 2% target.
Yeah, that PCE number, of course, is a number that we look at. And, of course, you read the headline inflation number, the CPI, and that, of course, is higher. But that comes into, how we invest in portfolios. And that means that oil stocks, of course, oil still over $110 a barrel, oil stocks have been doing well, and energy as a sector has been doing well.
Right. The energy sector has been leading the markets all year. In fact, it was the only sector up on the year last week. And this week, the XLE, which is the ETF most widely followed in energy, was up 8%. So again, the energy stocks continue to do well as they benefit from higher and higher oil prices.
And you go to the pump, and a year ago, nationally, the average is about $3.20. Today, it's in the high 4s. So that's a 50% increase in gas. And that hurts. We know that hurts, and no one wants to do that. But we're starting to look at numbers, for example, like the PCE number coming down, and real estate numbers we're looking at, is that starting to moderate as well, when we saw new housing starts down more than 16%. And, of course, we knew there was a housing bubble as well. So as all of the air starts to get let out of the bubble, that is a good thing. And Danny, you're a cyclist, and when you fill up these tires, it takes a long time, right?
Well, it's a high-pressure thing, too, but it does. You get a good pump.
Right, but right. So when you take the air out, it comes out quickly. So it'll take time for this thing to pump back up. But these are the numbers that we're looking at. And the last thing I want to point out economically, Derek, is what's happening with the U.S. dollar, because that plays into inflation.
Right. The dollar has weakened recently after making new all-time highs. In fact, many people were thinking it may go to parity against the euro dollar. So weakness in the dollar is probably a little bit helpful, as well as some of the other things we've seen. Lumber prices, for example, are now 50% off their peak. We know auto prices are starting to come down as well as availability improves. We know the bottlenecks at LA Harbor have also started to diminish. So there are a lot of positive things going on. The question is, what will the Fed do about it? I mean, they basically telegraphed this week that they're looking to hike rates twice by 50 basis points, but some suggest they may do wait and see in the fall as we see what the effect of their policies has brought.
Right, so there's going to be 2 rate hikes that they've told us about, and so we're going to have to see what happens with inflation if it starts to mitigate. In fact, folks, don't forget that there is an election in November too, so we'll probably start to see something out of Congress or the White House to try to get some things going as well. But this is a really important point. I want people to remember this. Today we're trading at 4,000, more than 4,000 in the S&P 500. If you go back to February of 20, before the pandemic hit, the S&P was trading at 3,400. And, of course, it dropped all the way down to 2,300 into March 23rd. But, from where we were, even before the pandemic, we are higher. And that's something that folks have got to keep in perspective, that we've come a long way. And that's the reason why what's in your portfolio is really important.